Hello and welcome to another episode of Building Success, a real estate podcast. My name is Nick, and I will once again be your guide as we talk to some of the best and brightest in the worlds of real estate tech, operations, and financials from across the globe. This podcast would not be possible without listeners such as yourselves. So if you like what you hear and you want to hear more of it, please think of subscribing, liking, reviewing, commenting. Wherever you get this podcast, all of that helps us know how we're doing and provide the best content for future episodes. You may have also heard we have a brand new Building Success Real Estate Vibes t-shirt. If you want to get your hands on one of these limited edition pineapple tees, please leave us a review wherever you listen to the podcast and shoot it over to info@buildingsuccess.io, and we will get a shirt delivered straight to your door. Sizes and quantities are limited. When we're out, we're out. On today's episode, I speak with Kris Beible from Software Equity Group, and we take a spin on real estate that we haven't really discussed or talked about in the past, and that's mergers and acquisitions. And Kris is very knowledgeable from the seller's point of view of, a lot of the activity going on in the market with organizations that are being bought and sold and merged. And he gives some insight into what that process looks like, how it's been affecting real estate over the last 3 to 5 years, and what the future outlook is in this space for organizations and software companies as they continue to grow and evaluate their options as it relates to the market, and ultimately what it means for the end user who might be using some of these software systems. So definitely a super insightful conversation with Kris, and we hope you enjoy it. So today I am here with Kris Beible. Kris, how are you doing?
I'm doing great, Nick. How are you doing today?
I am very well. I'm in Cleveland and it's cold. You're in San Diego, which is much nicer, I think, considerably.
That's right. I won't share with you what the weather is out here in San Diego today. Yeah, I'll just leave it at that.
Much appreciated. For our listeners, I think we should just go ahead and start. And maybe we kick off with you just introducing yourself and what brought you to SEG.
Yeah, well, thank you, Nick, and I appreciate the time. My name is Kris Beible. I'm Vice President at Software Equity Group, or SEG. I've been with SEG for about 13 years, I think. So it's been a while. We are an investment bank and M&A advisor in the software industry, and it was way back in my college days was something that I thought was an interesting industry to be in, one that kind of involved strategy, finance, and technology. And so fortunately, was able to find all of that in a small boutique in San Diego, which was unexpected. And so that, I've been fortunate to kind of stay within at Software Equity Group for a number of years and able to stay in the San Diego region. I would suspect that, going back then, I wouldn't have expected to be around here for that long of a point in time, but it's been a great experience.
Awesome. So can you tell me a little bit about Software Equity Group, what you do at your core, and then obviously the really focus of this conversation that I want to go down is specifically real estate, but more broad, what is it that you do?
Yeah, absolutely. That's a great question. So SEG has been focused on working with smaller software companies, SaaS companies for 20 plus years. We focus on the sell side of mergers and acquisitions. So we are typically advising software companies, SaaS companies that are looking to either sell to a strategic party or raise capital, typically in the form of a majority recap. So it's a control type of investment where there's some liquidity as well as some growth capital that's coming onto the balance sheet. And so we work with businesses that are across the software landscape, not just within the real estate segment. Real estate happens to be, I think, our strongest area of focus, but we do work outside of the real estate software arena as well.
So talk to me about real estate. This is what really interested me about talking to you was I've interviewed probably dozens at this point of smaller tech companies in the real estate space. So probably the wheelhouse of the type of companies that you work with on a regular basis. And it seems to me, being someone who's worked at MRI Software too, that this activity has really picked up and grown over the last couple of years. What has been your kind of perception of M&A as it relates to real estate?
Yeah, it's a great question. I mean, so, we as a firm have been, I think we're fortunate to have found ourselves in, a great position in terms of, everyone is hurting or flocking to the real estate technology ecosystem landscape over the last 3 to 5 years. We as a firm have been focused on the space for, I think our first deal was maybe in 2004, 2005. So we've been focused on the real estate tech markets for a long time, both on the multifamily as well as other commercial segments of real estate. And for a long time, it's been a vertical that's very unique, has some very unique dynamics that cause it to be viewed as a very different animal than, say, the corporate arena. And so for that reason, number one, historically, you've seen the lack of investment dollars coming into the real estate space. And so you've seen less innovation for products for this end market. And so you've seen, in turn, less adoption. You also have, some end market dynamics in terms of real estate investors and operators and property managers that have been a little bit laggard in terms of their adoption of technology, not necessarily being pushed to adopt solutions for a long period of time. And that has all changed over the last, certainly decade, but, certainly the last 4 to 5 years. We've seen a really significant surge in, end customers looking for software to improve their businesses or the experiences of their customers or tenants. And then that in turn has attracted a lot of investment dollars to the space. And it's also attracted, buyers, frankly, to need to make decisions as it relates to whether or not they're going to build or buy solutions, rather than kind of just, sitting on their hands, if you will.
And have you seen that over the last, maybe even the shorter interim, that buyers in general are more likely to kind of buy than build?
Absolutely. So I think that this is one of those segments where we've tended to see more buy models versus, build software on their own. MRI is clearly, an example of that. There are others in the space as well that have taken that approach. But private equity is certainly, a part of that. Private equity firms, they're typically looking at a space that is probably very attractive in terms of the greenfield opportunities that exist for adoption of, software products, and they want to accelerate the adoption of software when they make investments. And so part of the thesis that they have is they want to see really nice organic growth in the businesses that they're investing, but they really want to complement that with some acquisitions or product type acquisitions that they could make to accelerate the growth of the business. And so we're generally seeing that as a theme across the real estate industry, and it's become I think more and more accelerated over the last 2 to 3 years, as you mentioned.
So what are some of those, I guess from the seller standpoint, the one that you represent, what are some of those key, valuation drivers that they're looking to position their business for sale, or even just to be monitoring to remain competitive in this space?
Yeah, I mean, it's another great question. I think that for most acquisitions that occur in the software industry, you see a lot of the bigger deals in the headlines, but 90% plus of the market are really these smaller tech and product driven deals that are occurring. Businesses that are sub 15 to 20 million of revenue. Oftentimes, many of them are well under 10 million or so of revenue. And the reason or the rationale for the deal occurring is that the buyer has a gap in their product suite, and they are in that build versus buy decision. And in the real estate space, more often than not, they're choosing to buy and get the product in the hands of their customers as quickly as possible. And actually, the rapidity, the pace of which that product is being adopted in the market. So if there's a new trend that's occurring and customers are just absolutely clamoring for that type of a product, that pace is going to drive the pain that the buyer has, and in turn is going to drive the value that they're willing to pay for that potential acquisition target. If customers aren't really asking for something, but it's kind of more of a nice to have than a need to have, then there's nothing really driving them to really be super competitive in terms of the valuation that they'd be placing on companies that are providing those types of solutions.
Gotcha. So beyond the financial aspect of the deal, when you're looking at organizations and trying to figure out if there's synergy or if there's a fit, what are some of those non-financial maybe pieces that you look to make sure that the fit between the two companies is something that's sustainable? And one thing I have in the back of my head is obviously technologies are different between organizations, and maybe with some of these startup businesses, the way that they built their product might be a hindrance to adopting and fitting in with more of a global technology stack. Are those the types of things that kind of get reviewed and become part of the deal, maybe more so than they used to be?
Absolutely. I mean, obviously, financial metrics are important in any deal, but there's a whole number of other, aspects or attributes of an acquisition that buyers and investors are, valuing, and sometimes, in some cases, equally. So number one, I think to your last question, I think the product itself, needs to fit in with the strategy that buyers and investors have in the market, and is this something that makes sense for them, right? If you take sort of the fork, knife, spoon example, and you're sitting down to eat, and you've got a fork and a knife, and you've got a bowl of soup in front of you, it'd be really nice to have a spoon.
Yeah.
So you want that to be really complementary from a product standpoint. The size of the end customers that you're serving, are you serving the long tail of the market that you're, the long tail of the market, and you're going out and having conversations with, investors, buyers that are focused at the enterprise level? That may not make sense. Maybe it does for some. Maybe they see extending into the SMB market as a significant value driver for them. So you could look at it both ways. From a technology standpoint, absolutely. I mean, the typical example is, we still sometimes run into businesses that are, providing their solutions in a traditional license and maintenance and support and services type of model. And that just doesn't mesh for some buyers, but it does mesh for others. So I think, there's a lot of nuances to it. There's certainly a number of, attributes that buyers are looking for that are non-financial, but in many cases, its beauty is in the eye of the beholder and understanding the audience that you have in front of you.
Yeah, and at the end of the day, it's if that piece of technology or that software or that service is that missing piece for a buyer, I mean, that can trump a lot of other pieces and parts, It
can, and I mean it's the fascinating thing about the software arena. Is this beauty is in the eye of the beholder. In many of the processes that we end up running, we may see a really large spread in terms of the valuations that are being placed by a number of different parties. And it's oftentimes very unexpected. We also, we've been doing this for a long time. We're typically pretty spot on in terms of the guidance that we're providing to companies that we end up working with. But we even surprise, to the upside occasionally. In some cases, we've seen deals occur, at 2x the value that we thought we would be in the market, and that is purely because of that beauty is in the eye of the beholder.
Yeah.
The strategic synergy, the non-financial metric, types of synergies you mentioned that are virtually impossible to, sort of forecast until you actually get into conversations and, both parties are really starting to understand what that fit is and how, 1 + 1 can equal 3 or 5.
Sure. So talk to me about that process, because that's something I don't think a lot of people really have insight into. And again, you mentioned that you represent the seller. Is this for your business and your org? Is this something where you go out and you try to find businesses that you could put up on the market? Do they come to you? Is it more of an inbound model? How does that work for you guys?
Yeah, absolutely. So, number one, we as a firm, we try to stay really laser focused on the segments that we know well and that we play in well. And so we try not to stray too far outside of those boxes. Mm-hmm. So we spend a lot of time publishing research and information within key verticals, real estate being one of them, where we're tracking all of the activity that's taking place in the space. We're mapping out, the ecosystems within the real estate segment, so that we can just continue to get smarter and smarter and smarter. And a lot of our, what end up being our clients track and follow the research, and it creates, conversations, over a long period of time, and we're able to share a lot of our insights, with them that allow them to bring that information into any decision cycles that they may have about future strategic events that they may be, considering or pursuing. We also get a good amount of inbounds just due to our sort of brand recognition in the space. But at the end of the day, what our business really is we're providing information to the market and to our clients, trying to allow them to make the best decisions that they can with all of the information at hand, and trying to guide them through those processes, which many of them have never been through, and trying to minimize or mitigate the impacts that raising capital or selling a business may have on, the number one thing that they should be focused on, which is growing their companies and, getting their solutions out there in the market to their customers.
And that's funny. That was kind of where my head was going with my next question. So as you speak with some of these companies and they try to get ready for sale, are there certain things that you've noticed or trends amongst some of these organizations as things that they should be more focused on than maybe they are going into that process? Or what are some things that maybe the organization can do to get themselves ready even before they may be looking to go out onto the market for capital or for potential M&A activity?
Yeah, so I think it's there's certainly some high level financial metrics that we think are important, and so you want to make sure that you're tracking that information. We oftentimes will go through benchmarking exercises. In the real estate software world, we've got a lot of very relevant information and data, and a lot of companies that we've worked with where we can anonymize some of that information and provide some good valuable benchmarking exercises to companies. So I think, going through that and understanding sort of, how you compare and contrast with others and what some of those outcomes were, I think can be helpful in terms of, setting some concrete, understanding of where the business may need to get to in order to achieve the goals that you have. I think making sure that, a lot of companies that we talk to, I think could do a little bit better job, maintaining some of the relationships with the larger parties that could be potential buyers, as well as some of the private equity firms out there. There are a lot of private equity firms out in the market, and so it can get a little bit confusing and overwhelming if you're taking every single call from everyone. But at least the ones that have investments in the space, you want to make sure that they know that you exist in the event that they're going through some decision about whether they want to buy or build, this type of product. And so that if they are making that decision, you're at least getting a phone call and you're involved in the conversation.
Yeah.
I think, and then just kind of generally speaking, keeping in touch with, others in and around the space to ensure that you've got sort of the latest and greatest information and intel in terms of some of the strategies that other players in and around the space are pursuing. I think is certainly something that's important.
Yeah, and it's interesting because I think a lot of people think these kind of spring up out of nowhere, but to your point, and we were talking a little bit earlier before this podcast started, there's certain businesses that maybe, might be interested or sniffing around for maybe even years, and just knowing when those fits might occur. You never know when those deals might pop up, but, to always be ready and willing to listen.
Yep.
What are you already starting to see in 2020? Are you seeing the same amount of activity? Are you seeing it increase even more, slow down? What does the future look like from your perspective as it relates to real estate?
We're really bullish on the real estate tech ecosystem, and as I mentioned, we feel very fortunate to have the number of deals under our belts and in a good position to continue to work with companies and advise them through acquisitions and investments in 2020. But we've done 27 deals in the real estate tech space overall. 7 of those were actually in 2019.
Oh, wow.
And I could be wrong, but I think 4 or 5 of those were actually in the fourth quarter of 2019. And so if anything, our activity is accelerating. We actually we announced another deal in the space last month as well. So we're not seeing any signs of the space slowing down. If anything, it's accelerating. There continues to be just a plethora of capital flowing into the space. That's going to continue to drive organic growth, and you're going to continue to see larger companies do deals. You're also one of the other things that's interesting is just the distribution of buyers has increased over the last year or two. So if you were to kind of go back 10 years or so, there were really only a few buyers in the space, like in the multifamily space, and maybe a couple in the owner-occupied commercial side, and a couple or a few in the multi-tenant commercial side. And I would say the same thing probably on the residential software side. But now you've got maybe half a dozen to a dozen really solid, strong potential acquirers for businesses in each one of these spaces, and a lot of overlap as well. So, for instance, obviously MRI plays in a number of different segments of real estate, not just on the multifamily side, but also in a number of different segments on the commercial side. And so you're starting to see that dynamic play out as well, where you're seeing some of these really large consolidators that are presenting opportunities for potential targets that just didn't exist a number of years ago. So we're really bullish, and the economy, no one has a crystal ball, but it appears to be quite strong at the moment, and really not seeing any signs of tech M&A in the real estate space slowing down, at least for the next quarter or two.
Which is great, because at the end of the day, I mean, this ultimately benefits those end users who are starting to really experience kind of that. You mentioned the words ecosystem. quite a bit. And I feel like that's all coming together for a lot of these end users to provide them more options and more ways to configure what ultimately becomes the way that they want to run their business, which is something you highlighted earlier today too. So Kris, I want to thank you so much for your time. I appreciate you kind of giving some insight into this world. I know from my perspective, and probably from a lot of our listeners, it's one that we're not really privy to, but it's cool to see how much of that action is still kind of flowing through the real estate industry and just continues to as this market continues to evolve and grow. So thank you so much for your time.
Well, thank you as well, Nick. We're really excited about the continued growth in the space and really appreciate you inviting us to participate today. So thank you.
And before I let you go, you had mentioned that your company, puts out some research and information. If people want more information about you or SEG, where can they go to get some?
Yep. Absolutely. Thank you for the plug. You can absolutely visit our website, which is softwareequity.com, and you'll find plenty of information about our team, the deals that we've done, and then there's also a research page which has a plethora of research reports, not just within the real estate tech ecosystem, but also the broader software industry. So we'd certainly encourage any and everyone to visit the research page. All of that information is complimentary.
Beautiful. Well, again, Kris, thank you so much, and we'll talk later.
Okay. Thanks, Nick.